Welcome to the deep dive. Today, we're jumping into a really interesting financial analysis report. It's all about Alphabet C, GOGG. Now, look, we're not here to give you investment advice. Definitely not. Our goal is just to help you quickly get the main points, the key insights from this pretty complex report. Think of it like a shortcut, maybe. A way to understand what's really moving the needle for a giant like Google.
Exactly. And this particular report we're looking at, it's from a trader named JinLog. It uses something called the VPAR Rhythm Trading Method. What's interesting about it, I think, is how it tries to cut through all the day-to-day noise. It focuses on the market's underlying rhythm, trying to catch these bigger trend shifts, and crucially, only acting at specific pivot points. So less noise, more signal. Avoids overtrading.
Okay, the market's rhythm. I like that. So let's unpack the core idea here. The report says Alphabet C entered a swing trend back in early July, and it just cleared something called a midterm supply zone. What does that actually mean for us in plain English?
Right, good question. So that swing trend, basically, it suggests the stock might be moving out of a phase where it's just bouncing around sort of sideways, what the report calls range waves, and potentially moving into a more steady, sustained uptrend. And clearing that midterm supply zone, think of that as breaking through a price level where a lot of people were previously looking to sell, overcoming resistance. So with the stock trading around, $185.94 currently, clearing that zone is seen as a positive signal, and that's why the report then lays out these specific buy entry points.
Oh, okay. So breaking through a ceiling, essentially.
Much, yeah.
And this is where it gets really specific, right? The report gives three different opinions: short-term, swing-term, and midterm buys. Can you walk us through those? What are the levels and targets?
Absolutely, and they're quite distinct. So for a short-term buy, the entry suggested is $182, targeting $195. So the condition is rhythm formation and TRAP-P 023 confirmed. That TRAP thing, essentially, it's checking if the trading volume strongly supports the direction of the move. Like, are buyers really committed at this level?
Okay, so TRAP is about conviction. Got it.
Exactly. Then for a swing-term buy, the entry is lower at $175, but the target is higher, $275. This one's recommended on a rhythm pullback and recovery. Plus, you want to see sustained order flow buildup. So you're waiting for a little dip within the bigger uptrend to get in.
A buy the dip strategy, almost.
Sort of, yeah, but within a specific technical context. And then for the midterm buy, the entry is $181, aiming for $240. This is advised after midterm consolidation signals a new acceleration, and importantly, after regulatory risks are priced in. So it's a longer view, assuming the market digests some potential bad news.
Wow, that's quite a detailed roadmap. It really does sound like a dance with the market, like you said. But what's actually holding this whole optimistic view up? What are the fundamental strengths for GOG right now, according to the report?
Yeah, that's crucial. It's not just charts. The report points to several really strong tailwinds. First off, Google Cloud, it's just a powerhouse, showing 26% revenue growth. That's huge. It brought in $12.26 billion. It's a major anchor for them.
Okay, 26% is definitely strong.
Right. And then there's the big OpenAI partnership. Google Cloud being named OpenAI's official cloud partner. That's expected to drive a lot of AI-related workload and revenue. It's a very strategic move. And underpinning all this, the financials look solid. Q2 2025 results were strong. Revenue hit $93.8 billion. That's up 10.7% year over year. Net income was $26.5 billion, up 12.2%. Plus, they have a really strong balance sheet, loads of cash, huge R&D capacity. They're well positioned.
So it's definitely not just hype. There are solid numbers and these big strategic plays behind it.
Precisely. There's real substance there.
Okay, so we've covered the fundamentals. Now, this report gets pretty technical, using terms like rhythm analysis and Elliott wave analysis. For those of us, who aren't professional traders staring at charts all day, how do these tools actually help shape this strategy? What insights do they give beyond just defining those terms?
That's a really good point. It's about how traders try to read the market's internal dynamics beyond just the news headlines. The rhythm analysis, using the VPAR method, it looks at how the stock's price bands are behaving. Are they widening, narrowing, shifting? For the short term, the report sees acceleration maintenance. The bands expanding suggests momentum is picking up.
Right.
For the swing term, it's upswing maintenance. Seeing the price recover back towards the center of its trading band signals the trend is still solid. And for the midterm, it's in formation. The band's contracting actually suggests energy is building up, like coiling a spring, before the next big move. So it gives you a feel for the energy behind the price.
Interesting. So it's like reading the market's body language in a way.
That's a great way to put it, yeah. And then Elliott wave analysis adds another layer. It's based on the idea that market prices move in specific repeating patterns or waves. For GJO, the report identifies a short-term wave 3 starting around $182.
Hmm.
Now, wave 3 is typically the strongest, most powerful part of an uptrend, so that's a very bullish signal right there.
The main thrust of the move.
Exactly. Then it sees a swing term, wave 4, potentially forming around $175. Wave 4 is usually a corrective pullback within the bigger trend, so the report sees this as an ideal spot to re-enter or add to a position.
Okay, the healthy dip again.
Right. And then, for the midterm, it sees the current action around $181 as part of a wave 2. Wave 2 typically forms the base after the initial move up, setting the stage for that big wave 3 impulse. And remember, that TRAP 023 condition, all these wave interpretations are checked against that volume confirmation, adding confidence to the analysis.
All right, so the waves provide the pattern, and the TRAP confirms the market's agreement with that pattern. That really helps break it down. Okay, so beyond the charts and the technicals, what about the general buzz? What's the broader market sentiment, the community flow saying about GOG?
Yeah, the report dives into that too. It tracks mentions across different platforms. On Reddit, specifically technology, mentions were up 15%. The keywords popping up most were Google Cloud, AI, and interestingly, antitrust. So you see both the excitement and the worry right there.
Yeah, that makes sense. What about Twitter?
Twitter mentions using the hashtag GODO hashtag, they increased by 20%. And the sentiment analysis there was about 60% positive, 25% negative, and 15% neutral. A clear positive lean, but still significant negativity.
And stock twits. That's usually more trader-focused, right?
Exactly. Mentions there are up 12%, and the sentiment was even more bullish. 68% bullish messages versus 32% bearish. And digging into the keywords, the positive sentiment was often linked to growth, partnership, cloud. The negative side, regulation, fine, sell-off. Pretty clear themes.
So a definite split, but maybe leaning positive overall, especially among active traders. What about the big money, the institutional players? Are they buying into this story?
That's a key piece. And yes, according to the report, institutional net purchases are up 12% year to date. That's a significant inflow of big money. Plus, GOG holds a substantial 4% weight in the S&P 500, confirming its status as a core holding, a sector leader. And another interesting point. Overseas funds hold about 24% of the ownership. That shows strong global confidence, global inflows. So these large-scale order flows, when you combine them with the rhythm and wave analysis, really help bolster the case for those entry points the report suggests. It's like seeing the technicals confirmed by actual money moving.
Okay, wow. So strong fundamentals, positive technicals, generally positive sentiment with some clear worries, and institutional buying.
Yeah.
Sounds like a pretty compelling growth story. But, you know, every investment has risks. What are the big headwinds or potential problems that this report flags for Alphabet C?
Right. And it's crucial to look at this side, too. The number one concern flagged, and it comes up repeatedly, is regulatory risk. The report specifically calls out that big EU antitrust fine, $4.1 billion, and the ongoing noise about potentially having to divest Chrome.
Yeah, those are definitely major issues.
Absolutely. And you saw it reflected directly in the community sentiment keywords, right? Regulation, fine. The report's outlook is quite clear. While things like the OpenAI deal and the strong Q2 results are powerful drivers, these regulatory issues heighten uncertainty. They really stress that event-driven risk management is essential.
Event-driven risk management, meaning you have to be ready for sudden news drops related to these cases.
Exactly. A court ruling, a new investigation announced. These things can impact the stock price quickly and significantly, regardless of the underlying business performance sometimes.
It really highlights that tension, doesn't it? You've got this engine of innovation, the cloud growth, the AI partnerships pushing forward, but then you have these major regulatory clouds hanging over it. How does the report suggest balancing that? Or how should, someone reading this think about that balance?
Well, the report doesn't offer a magic bullet, obviously, but it frames it as a dynamic situation. You have undeniable strengths. The financials, the market position in AI and cloud are real and powerful. You see that in the numbers and the positive sentiment. But operating at this scale, regulatory scrutiny is just part of the landscape now. It's a tangible force, not just a theoretical risk. So the challenge, as the report really emphasizes, is constantly weighing those strong growth drivers against the unpredictable nature of regulatory actions. It's this ongoing interplay. It demands vigilance and the ability to adapt as new information comes out.
Right. It's not a set it and forget it situation, especially with those potential regulatory events lurking.
Definitely not.
Okay, so that brings us to the end of this deep dive into the Alphabet C analysis.
Mm.
We've seen a picture of a company with really strong performance, leading in key areas like AI and cloud, backed by that OpenAI deal. We've seen positive technical signals, market sentiment leaning positive, institutional support. But, and it's a big but, also facing these very significant regulatory challenges.
Indeed, I think this analysis shows really well how even companies on clear growth paths are constantly dealing with these major external forces. Regulation is a huge one for big tech right now. It's a good reminder that these things don't operate in isolation. So maybe something for you to think about is this. How will this ongoing tension, this dance between rapid technological innovation and the increasing efforts towards regulatory oversight, how will that continue to shape things? Not just for a giant like Alphabet, but really for the whole global economy going forward. It's a really big question, I think, worth pondering.
Absolutely, a fascinating dynamic to watch. We hope this deep dive gave you a clearer, maybe more nuanced view of Alphabet C's current market position and all the forces acting on it. Until next time, keep exploring, keep learning, and keep asking those big questions.